Welcome to the Care Right podcast, your go-to resource for all things elder care. Guiding us through this journey is Annalee Kruger, the founder of Care Right Incorporated, and she has been steadfastly supporting families across the United States. Each episode brings you expert insights, innovative strategies, and practical advice, ensuring that you're well equipped to provide the best possible care for your loved ones. Expect to gain valuable knowledge, learn from real-life stories, and get inspired to take action in your own caregiving journey. So buckle up as we dive into an in-depth discussion of elder care planning and together embrace the journey of caring for aging loved ones on the Care Right podcast.
Hey everybody, my name is Annalee Kruger. I'm the owner of Care Right Incorporated. We work with families all across the country in developing customized aging plans. We hope to reach families while they're in the proactive stages of realizing, hey, I don't think, something's going on with mom and dad. We should be aware of this, or, mom and dad are starting to slip a little bit, or dad's lost weight, or mom's dementia seems like it's progressing. We try to reach families in the proactive stage, in the beginning stages of being family caregivers and realizing that maybe things aren't going as well as you had hoped with your parents. That said, that many of our clients come to us, unfortunately, in crisis mode where the family caregiver is completely burned out. Family relationships are very strained. The primary caregiver either has had to step away from their career or their families and found themselves thrust into the role of family caregiving and have finally now realized, I don't think I have enough grit to do this long term, or my loved one's care needs exceed what I'm able to provide for them properly. So we work with families all across the country. We've been virtual since 2011 when I started my business, Care Right Incorporated. So if anything that I just shared with you hits home with you, please make sure that you reach out to me, Annalee Kruger at carerightinc.com, because we want to make sure that you have an aging plan and you know what care options are available to you, what care communities might be available to you, what's the value of home care, what if mom and dad's goal is to age in place at home, how do we pay for that, what kind of cost are we looking at? So it's really helping families understand and navigate that aging journey, the caregiving journey, dementia progression, all of those things that tend to get very overwhelming very quickly when you don't have an aging plan in place. And I say every day, families don't know what they don't know, and because they don't know what they don't know, they make very, very expensive mistakes that could have been avoided if they would have worked with a professional to help them with decision making. But so if any of this strikes home with anybody listening or watching this podcast, please reach out. So we offer a free complimentary to you 30-minute consult over the phone or on Zoom. So as you all know, I like to have fun and interesting guests on the Caregiver Crisis podcast. And so today is no different. Today we have Chris on the line, and I'm going to do an introduction for Chris so that you get to know him as well. So Christopher Nolan is a New York Life representative. He lives in New Jersey. He's been a lifelong resident in New Jersey. He's married. He has 3 children, ages 30, 29, and 22. And the latest addition to his family is a 6-month-old chocolate lab named Beans, which I think that is so cute. So Beans is your new chocolate lab pup. Chris works with clients in all stages of their financial life, helping them understand their options and achieve their goals. So today we're going to talk about what is long-term care insurance, what's the government doing about long-term care insurance costs, what about Medicare, how does that all tie in together, and what do we do if there's a family member that needs to have long-term care. So this is really important to learn and to know what options are out there, because we do know that 58% of adult children find themselves thrust into the role of family caregiving. And it's not always the right fit. So tell me about what you do, and tell me about long-term care insurance. What does that all mean?
Well, it's funny, you hit the nail right on the head in terms of that 58% of caregivers are family members. And they usually have to leave a job or take a sabbatical or try to manage somehow going to work and going to work late, caring for a parent. So not only does it become a financial burden, but it's so much stress on the whole family. And so, long-term care insurance is designed to really take that burden off and help pay for care. And when we think about care, it could be anywhere. Most, if you surveyed 100 people and said, hey, if you're going to need care at some point in the future, where do you want to receive that care? At home, assisted living, or nursing, or a nursing home? They're all going to say at home. And that's where people want to age in place. And long-term care insurance is designed to help that and pay for it. Another thing that hit home with me when you said people don't know what they don't know, or you don't know what and unfortunately that's true. And a lot of people, the majority, think that Medicare or Medicaid is going to pay for this, and it doesn't. Medicare has a cutoff of a maximum of 100 days, and the average long-term care event is between 2.5 and 3.5 years. So that's what we're dealing with. And, it's too late when you get to that point and realize, Medicare's not paying for this. Well, who does? You do,
Yep.
And it's funny, the majority of the clients come to me when one of three things that happen. Now we are accredited through AARP, so some leads come right from AARP. They do a wonderful job, but it's either they've spoken with their financial planner, and their financial planner says, "Look, you've got this nice portfolio. You need to protect it. Talk to somebody about long-term care insurance." So that's one of the main places people come from, but primarily it's they've had an experience, or they're dealing it with their parents. They're in their 50s or 60s, and they're dealing it with an aged mom or dad that's in their 80s, and the light goes off and says, "Okay, we're up against the rock here. Mom doesn't have money to pay for this, so I'm going to do it. I don't want to do this to my kids, so I'm going to take the steps necessary." So it's the kids that are experiencing it with their parents,
Right.
that come to us and say, "Hey, I don't want to do this. I don't want to be a burden."
Right. And, when I ask my clients, I have a holistic approach. So my client is the whole family, right? So when I ask moms and dads, what are your goals as you age? They all say the same thing. I want to age in place at home, and I don't want to be a burden on my kids. But guess who is calling Care Right for an aging plan? It's the adult kids, because they're burned out, or they are afraid they're going to end up burned out if they don't do something differently soon. And they're right. So when I ask the adult kids, what are your goals for your parents? It's almost always the same thing. We want our parents to be happy. We want our parents to be as healthy as possible. We want them to have the best quality of care possible, and we want them to have the best quality of life. So the only way to kind of marry those goals that the family has is through an aging plan. And part of that planning process is identifying where are the gaps in your planning, and what is your understanding of dementia, what's your understanding of home care, what's your understanding of long-term care, and how that gets paid. Most of my clients, when they start with me, they're coming to me with complete misinformation, where they think Medicare is going to pay for all of these costs, or that Medicare is going to pay for my aging plan service, or that Medicare is going to pay for dad to go into memory care for 8 years. And that's just not the case. And I know that you probably see that all the time too, with just families coming to you just completely misinformed. And when you're misinformed, you're not making smart decisions.
Yeah.
Right.
And you're very limited in the options that you can take, because it might be too late at that point.
That's right. That's right.
it's funny. So a lot of people don't understand what it is, and it's really just custodial care. It's when somebody can't perform two of the six acts of daily living, which is bathing, eating, transferring, toileting, continence, and dressing. So that, your doctor will say, hey, you need help, and it could be, a very common thing. You fell at home and had to go into a nursing home. They want to get you out as quickly as possible and home, and somebody caring for you at home, but you can't do it on your own at that point. So that's what long-term care is. And you don't have to be 85. I mean, it happens to younger people too.
Right.
You could be in your 50s and have a knee replacement or hip replacement. And again, they want you home as soon as possible. So long-term care can pay for that as well. I think one of the big myths or mistakes is that it's expensive. And it really isn't, especially if you start young. Now, if you can typically get a policy up to age 80, and after that, there's a cutoff. But as we know, you got to be healthy, and when we're in our 70s and 80s, we're not quite as healthy as we were when we were in our 60s, 50s, and 40s. So really, the time to do it is when you're younger. And it's certainly much less expensive to start when you're younger as well. But in terms of expense, that's the first question people always ask: how much does it cost? And it's one of those things that it can cost really whatever you want. You design your plan. What do you want your daily benefit to be? I would say average people look for something that's going to provide between $100 and $200 per day in a benefit, and that will last usually between 2 and 3 years, because that's the average long-term care event. So on a daily basis, that could be $5,000 or $6,000 per month that you would have to pay somebody. But if a policy like that, depending on your age, is typically less than $100, maybe a little bit more than $100. So $100 a month now is paying for $5,000 or $6,000 in care later.
Right.
And that's a big.
It's a chunk of change, because I can tell you, when I meet with families, because they are coming to me so ill-informed and they think Medicare is going to pay for everything. And so their eyeballs literally pop out of their face when I say, well, I have clients in, Rhode Island that are paying $14,000 to be in a nursing home. And that's just one parent. When you've got two parents, that's $28,000 a month. In that particular, certain areas of the state are way more expensive than others. Yes. Assisted living centers can be anywhere from $5,000 to $8,000 or $10,000 a month, depending on the level of care that your loved one needs. Home care is, before the pandemic, used to run anywhere from $21 to $28 an hour, and they all have 4-hour shift minimums. But since the inflation from the pandemic, I have clients paying $30 and $40 and $50 an hour for home care, and they all want 8 or 10-hour shifts, because then they get paid more, right? And so when families are assuming that Medicare is going to pay for something, or they think Medicaid is they think Medicare and Medicaid are interchangeable, and they're two totally separate programs, right? Like, you do not want to end up on Medicaid, because then you lose all options of where you want to go for care and who's going to treat you as a provider. But when families are misinformed like that, they don't necessarily see the value of long-term care insurance until, like, I'm meeting with them and facilitating their family meeting, and we're talking about the cost of care. And they're like, wait a minute, I thought Medicare pays for this. I'm like, no, it does not. So while a lot of my clients, the moms and the dads, have long-term care insurance, now that's underlined the importance of it for the adult kids, because it's not too late for the adult kids to say, look, we need to get some sort of coverage, because the likelihood that any of us are going to need long-term care at some point is high.
When you're 65 and over, it's 70%. So when people say who's going to need it, 70% of us over age 65.
Yep. And so we know that there's different states doing some different things with government programs to help offset the cost of care. There's some pros and cons to that. Like, if you move out of that state, then you kind of lose the money that you've already kind of deposited into it. Yeah. But what's kind of your take on, like, can you just kind of provide a couple minute summary of what's going on with some of the states?
Yeah, it's all real new. In fact, Washington State was the first state to do it. It's in place. And basically, when they did that, you had a lot of people scrambling at the last second trying to put their own long-term care package in place because they didn't want the state plan. For one of the reasons you mentioned, if you move out of that state, you lose all your benefits that you paid in. It's also, they're really looking at very bare bone minimums just to kind of offset. So they're not going to cover a whole heck of a lot. I think the benefit's about $36,000 a year. That's not a lot for 1 year. So, but they're taking money out of people's paychecks.
Yep.
And that's how they're going to their start. And now other states are starting to follow. I think New York is going to have something in place by the end of the year.
Yeah.
So yeah, if you don't have a plan, the state has a plan for you. And unfortunately, it's not a real good one.
It's not a good one, and when you're not the one directing your own, it's cut and dried. It's just like anything in life. The more resources, the more money you have, the more options you have, right? And so the better you plan now, the better options you'll have later. And when you choose to not do any planning, then you get what you get for options. And right now it's, the states are trying to, they're scratching their heads going, how can we help offset the cost of care? Because we know that more and more people are going on Medicaid, and the Medicaid system is already broken and it's already overstretched. And so if you don't want to end up being broke and in whatever Medicaid facility will take you, because that's what happens when you run out of money because you don't plan. When you end up on Medicaid, you don't get any choices on where you go for care. You go where there's an open bed and you hope and pray that you're going to get decent care.
Yeah, and you have to have very, very limited assets to go on Medicaid.
To qualify for Medicaid, you have to be very indigent.
And so it's not going to be the majority of people. The majority of people are going to have assets, but they're going to be in that spot where they're shopping around for what they can afford instead of shopping for the best level of care for what they have. And we have insurance on everything. We have insurance on our homes, our cars, our cell phones, for God's sake. We should have insurance on our retirement accounts, and that's long-term care insurance. So that nest egg that we built up over our working lives doesn't get depleted in 2 or 3 years by long-term care costs. And that's what I think. When people say, well, what if I never use it? I said, then you're lucky. It's just like homeowners insurance. You don't want a tornado to come and take your home down and say, wow, man, I really got my money's worth out of that homeowner's insurance.
Yep, exactly.
So if you don't use it, hey, you're ahead of the game. It's there if you need it. And there are even plans that account for that give people the option of getting their money back. So there's hybrid plans that if you die before you use it, it pays the death benefit, or if you want your money back after X amount of years, you can have your money back. But it's providing that protection for you while you need it. And too many people, they wait till the last second, and then they won't qualify. It used to be there were 30 companies out there offering long-term care insurance. Now there's literally less than half a dozen. I think there's about 5.
Yeah.
So they're picky, they're choosy, and it's hard to qualify.
Well, and they had to, that's just kind of what happened, because when these insurance policies were sold before, they really thought people would not still be alive and using them, but
we're living longer.
People are living longer, and that doesn't mean that they're healthier. That just means that they're in the nursing homes and assisted living centers longer. And so they're using their using their insurance that they paid for, and rightfully so. But now the insurance companies are like, holy cow, these people are still alive. We didn't think that they would be. And so like I'm 50 years old, and when I hit 45, I got a life insurance, what I call life insurance hybrid, because there are few long-term care insurance carriers anymore. And this way it's multifaceted and multi-pronged, so that if I don't need it, thank God, then I can use it as a death benefit, or I can use it as another revenue stream in case like Social Security isn't there. So there's a lot of different ways. You just have to be smart, because you have to do this type of planning now before it's too late, before you get that cancer diagnosis, or before you get diagnosed with MS, or you get hit by a car and now you're not going to qualify because you need care needs now and you won't pass underwriting. So consumers have to be smart about this stuff. And I say that just lovingly, but with enough passion towards it to disrupt people to stop being so laissez-faire about their future.
Yeah. And to that, I just want to share with you a couple of examples, because I stay in the process, and what I tell people is this has got to be something that's taking a burden off of you. Not that every month you worry about, oh, how I'm going to pay that premium. So we want to make sure we're designing something that's affordable and stress-free. I had a lady, I told you these plans really stop at 80. 2 weeks before her 80th birthday, we put in an application, and she got approved. Very healthy. I mean, she was still working. So at 2 weeks before her 80th, she was still working, a data analyst, very healthy. Got it, but it took a load off. Also had some younger clients in their mid 50s that got declined. Various reasons, they had done some knee replacement and had gone through physical therapy, and there's a waiting period. So underwriting said, come back after the waiting period, and they got declined again, second time. And it just took a little bit of perseverance for me to get a hold of somebody, to have them look at the doctor's reports and explain that, what you're looking at is something from birth, not something that's being treated now. And she got approved at a preferred rating. So sometimes it's just kind of sticking with it, and making sure that, that you get to talk to a human and follow through and get it approved. And on the sadder part, I had a couple that they were all ready to put in an application, said, let's just wait 2 weeks. We're going, my husband's going to the doctor next week, and he's for his annual checkup. I advised against it. He was diagnosed with cancer and he wasn't eligible anymore. That was on his record beforehand. Had he put in the application before that doctor's visit, he would have got approved. So,
I know, that's what I mean. It's all about timing. And I mean, not to be the Debbie Downer, but the reality is you and I both work with families in crisis, and we see the fallout. We see the mistakes that people who didn't plan ahead. Don't expect good options if you don't plan for it. You can only be willy-nilly about so many things in life. And God forbid, why would you be willy-nilly about your aging years when you're the most dependent and the most vulnerable on basically strangers taking care of you, when you're the most dependent and the most vulnerable? So that's why I have guests on these podcasts, just to wake people up and say, look, what are we going to do? How are we going to pay for care now that we know that insurance isn't going to cover everything? If you don't want to go broke, you need to plan ahead.
Yeah.
So,
like I said, plans are affordable, $100 a month. Not everybody can afford that, but most people can just cut back on maybe Netflix or something like that. And the government is trying to help. They're making them, they're giving tax advantages to business owners. They can write these premiums not only for the business owner, but their spouse. So they can write them off as a tax deduction, tax credit. So
and the oncoming care facility, you're more favorable to an oncoming care facility or a home care company if you have insurance, because that means they're not going to get stuck, with non-payment. So there's no downside.
No. And these plans, they're payable whether you have an accredited home health care aide providing your care, or if it's a son or a daughter and you're receiving casual care, you can still reimburse them. So the providers are trying to make them as attractive as possible and as flexible, so they can really tweak it to everybody's individual needs. The government's trying to help with tax incentives. So now
it's up to the consumers to decide to do the right thing for them and their family and their finances and their future care. We all have to be responsible and accountable for what our future holds in as much as we can. And so it's better to be prepared than not prepared and end up with whatever it is you end up with. So
exactly.
Well, good. So in the last couple of minutes, is there anything that we didn't cover that you thought would be important for people to know?
No, I think a lot of people just have questions and they're not sure who to ask.
Yep.
So somebody like you, somebody like me, not here to sell anybody anything. It's to educate. That is my,
educate.
that's my purpose in life. The more I can educate and help people that way, that's what I'm looking for. So yeah,
Yep.
I want to be a resource to families, help them, and educate them. And
Yep, exactly.
ask questions, reach out,
Yep,
there shouldn't be any stigma about that.
that's right. That's right. And it doesn't cost you anything to ask. It costs you
No.
to not ask, and it costs you to not explore options. So
Big time,
Yeah.
yes.
Yeah. So excellent. This has been so great. I really appreciate the back and forth with just educating families. I know this probably might come across as a little bit in your face to the listeners, but it's really because I couldn't be more passionate about this, because honestly, if people just followed me in my shoes every day and on all these Zoom calls with these crisis families, and they're crying, they're in tears, they don't know how to pay for care, they've already quit their job, and now what do? And so let's be smart, and let's have these conversations sooner rather than later, and let's be putting a plan together, whether it's an insurance plan through you or an actual aging plan, comprehensive aging plan through me. So I really appreciate your time today, Chris. This was awesome. And
Yeah, thank you for having me. I appreciate it. I'd love to do more of these.
Yeah, absolutely. So thank you so much for your time, and just sit tight. I'm gonna shut this down and end the podcast for right now.
Thank you for tuning in to the Care Right podcast. We hope today's discussion has provided you with valuable insights. If so, don't forget to like, subscribe, and share our podcast with others who might find it helpful. Remember, Care Right is more than just a podcast. It's a community dedicated to supporting family caregivers with comprehensive care planning, crisis management, and resources for every stage of aging. Stay connected with us for future episodes as we continue to explore essential topics in aging planning, elder care, and financial planning. Until next time, take care, plan wisely, and remember, you're not alone in your caregiving journey.